Strategic Tax Planning 2024 to 2025. Strategic tax planning has a tremendous tax impact. Many Americans are upset that the rich take advantage of the current tax system. What they do not realize is they too may be eligible for major tax savings. All it takes is a little strategic tax planning. This is Dave Horwedel, EA and CEO of Torchlight Tax. EA means Enrolled Agent and is the highest federal tax credential. It is very similar to being a tax specialized CPA, but has the advantage of being a federal license. So I am automatically licensed in all 50 states. Also, an EA, like a tax attorney, has unlimited rights of representation before the IRS. This means that an EA can represent any U.S. taxpayer. Individual, sole proprietorship, partnership, LLC, S corporation, C corporation, trust, or estate in the same way that a tax attorney can. All that needs to happen is that the taxpayer needs to sign IRS Form 2848 IRS Power of Attorney, naming the EA to represent him. Strategic tax planning takes the long view. It is best done as early as possible in the tax year in question. Certain aspects of strategic planning can be done after the tax year in question. These include making contributions to pension plans or IRAs, using cost segregation and accelerated depreciation, and certain credits. However, the majority of these strategies are done during the tax year. This is why it is so important to have a strategic planning consultation enough before the end of the year to take action. For example, a business can purchase equipment, marketing, and other things before the year ends and reduce their taxable income by so doing. This is true even if the business uses a credit card. Suppose you are looking at a $200,000 profit in your business and need a piece of equipment to improve your production that costs $200,000. You could zero out your taxable profit by making this purchase. This may or may not be a prudent decision, and you are welcome to contact us for a free consultation going over the pros and cons. For a free consultation, contact Torchlight Tax at 877-758-7797 or email info@torchlighttax.com. If you are in the 37% tax bracket and have access to a low-rate loan or credit card, this could be very attractive. 37% of $200,000 is $74,000, but this does require due diligence. If you spend $200,000 to save taxes and the equipment does not increase your production, you still lose. Whether a business is cash basis or accrual basis also affects their taxes. Also, there are many organizational steps that make it possible to do strategic tax planning. Tax filing can be a stressful time for many Americans. Here are 8 simple steps to lower stress and save time and money. 1. Have a stable storage space for your tax documents. I have to get my documents together. Does this statement sound familiar? We've heard it thousands of times from our clients at Torchlight Tax. Often the need to get them together is because you place them apart. Having a stable, safe space to store your tax records and perform your tax paperwork simplifies the tax filing process. There are 2 ways in which this can be done. Store your hard copy. The old school method of placing tax documents in one location will allow you to easily access your documents, saving you from a lot of hassle when you need them. It is also advisable to work on taxes in the same space next to your records. If your returns are simple, getting organized could mean a file or banker's box that you put in a closet and bring to your kitchen table. Toss out your junk mail, but not IRS and state letters and tax forms, such as 1098s, 1099s, and W-2s. When you receive and open your mail, place your tax mail in the same box. You will never lose your hard copy documents again. Save your soft copy. Make it a priority that you have a solid backup plan when storing information on electronic devices or online. Keep your passwords safe and invest in antiviral protection on your devices to avoid hackers. Take steps to become tech savvy. This will allow you to perform tasks such as scanning hard copy documents to save them onto your computer or other digital storage space. You can use an external hard drive, a USB device, or store your information in the cloud. Finally, download soft copy documents that you receive online through email or other apps. If you do this, then your computer and workstation will become your stable location. If your computer crashes, breaks, or gets stolen, you will still be able to access your documents due to your backup processes. However you do it, follow the system and always put the documents in the same place. 2. Keep separate accounts for business and personal. If you have a business, make sure that your personal and business accounts are separate. If you have multiple businesses, keep a separate bank account for each business. Deposit all business income into the business bank account and pay all business expenses out of the business bank account. Pay all personal bills from your personal bank account. Transfer funds from business to personal or vice versa before paying a bill. Keeping your business and personal accounts separate will save enormous time and effort. Ideally, you should have a business account and business credit card and a personal account and personal credit card. Properly used, these can replace shoe boxes full of receipts. By not commingling business and personal funds, you simplify your bookkeeping and tax filing enormously. Remember, if you pay an expense by credit card and take the whole expense as a deduction, you cannot take paying off the credit card as another business expense. Your bank account showing payment is usually adequate to show you paid an expense. For charitable donations over $250, you do need a letter of acknowledgement from the charity as well. 3. Understand your tax return. At Torchlight Tax, we answer questions when we review each tax return with our clients. This helps our clients understand what is on the tax return, which makes the process easier the next year. Clients become alert about what to look out for when it comes to taxes. 4. Keep track of your deductions and tax credits. If you buy solar cells or a new electric vehicle, these purchase documents go in your tax docs file for the year. You may also be eligible for educational credits or the child tax credit or even the earned income credit. Keep track of medical, charitable, and other expenses throughout the year. 5. File early. Filing your taxes early can help you avoid stress and ensure that you receive your refund as soon as possible. When you file your taxes early, you also have more time to prepare in case you owe money to the IRS. In addition, the earlier you file, the more time you will have to adjust your tax return before the deadline. Also, if you have filed an extension, try to file your taxes well before the extension deadline. 6. Get an extension if needed. It may be counterintuitive, but the IRS penalizes failure to file 10 times the penalty for failure to pay. At Torchlight Tax, as we approach a deadline, we get with our clients to file an extension for them. It does not cost anything and does not raise a red flag. Also, if you fail to file an extension before the deadline, you cannot file one after the tax deadline. 7. Contribute to your retirement account. Contributing to your retirement account is one way to save for the future and lower your tax bill. By making contributions to your 401k or IRA, you can reduce your taxable income and lower your taxes. Moreover, the money you contribute to your retirement account grows tax-free until you withdraw it in retirement. If you are self-employed, you can also contribute to a retirement plan. You can also contribute to a Roth IRA. In this case, you do not get a tax deduction now, but you are not taxed on withdrawal. If inflation is high, or you figure out a way to keep bringing in income during retirement, this may be a better option. The advantage of the traditional IRA is if your income goes down when you retire, you pay a lower tax rate. This situation may not be ideal. If inflation raises your income, tax rates go up, or you work after retirement age. The Roth IRA gives you no tax deduction up front, but it accumulates tax-free with no tax on distribution. Suppose you put in $5,000 in after-tax dollars, and it accumulates to $30,000 when you retire in 20 years. The tax you saved on the $5,000 would result in you paying tax on the $30,000 later. 8. Learn to think strategically. Most people live paycheck to paycheck. They learn to spend a little less or borrow money to get through shortages. They do not look at the long term. Try to figure out what you can do to increase your income. Is there a certification you can get to increase your income next year? Can you drive Uber on weekends for a year and make enough money to make a down payment on a small rental property or set up a small business? Can you set up a business to increase your income? Can you expand your business to increase your income? Saving money on taxes is important, but it is limited in that it by itself does not increase your income. So part of tax planning is increasing your income so that you have more after-tax income. You're welcome to contact Torchlight Tax for a free consultation to figure out strategic ways to increase wealth and minimize tax. Having a small business and/or owning and renting out real estate can assist you in building wealth and creating tax-saving options. Also, shrewd use of trusts, LLCs, and corporations can lower taxes and protect your assets. This is a great thing to go over with one of our experts each year. In the modern world, taxes are probably going to be your greatest long-term expense. Figure out ways to save and invest your savings to build assets. Once you start getting assets, take basic steps to protect them. Asset protection is a related field to taxes. I have had a tax attorney working for my firm since 2017. This has been very valuable to my tax practice. A side benefit is that he has assisted in setting up LLCs, corporations, and trusts for both tax savings and asset protection. This has expanded to the point that my legal team is now delivering these services in very effective asset protection structures. This includes LLCs in the state of operations, anonymous holding LLCs, irrevocable domestic asset protection trusts, revocable living trusts, and for the millionaires, foreign asset protection trusts. In addition to our U.S. attorney, I have an international attorney who oversees our foreign asset protection trusts. I also have a full-time paralegal and other support staff. There are different levels of asset protection based upon different asset levels and risk levels. Many people think that a revocable living trust protects their assets while they are alive. This is not true. A revocable living trust protects your heirs by keeping your assets out of probate court and giving them quick access to them. While you are alive, it does not protect you from lawsuits and creditors. Because it is revocable, the court can order you to revoke it, and the creditor or plaintiff can then take the assets. You are also welcome to visit our websites, Torchlight Tax and Guard Dog Tax, or corresponding YouTube channels to learn more tax basics and asset protection strategies. I have about 100 videos and many blog articles as well. Tax education is important. I want my clients to succeed, so I have tried to produce a lot of material that is easy to understand and as short as possible. Indeed, recently I have been concentrating on short videos under 60 seconds. To wrap things up, hiring an enrolled agent or CPA is prudent if you are not up to date on tax. A mistake on even a simple return can cost way more than the fee you pay a tax professional. If you want to take the time and trouble to understand taxes and file your own returns, that is great. Just be sure to review each year for tax changes and don't guess where to put a number. You will have to learn some tax nomenclature to do the job right. An enrolled agent or CPA can help you navigate the complexities of the tax code and ensure that you receive all the deductions and credits you are entitled to. We can also help you identify potential tax savings opportunities and avoid costly mistakes that could result in an audit. If you're unsure about the tax implications of a significant financial event, such as starting a business or selling a rental property, consult with an EA or CPA. There are many tax preparers who are not EAs or CPAs. They can have nice offices, quality stationery, and dress well. Many do a good job, many do not. By implementing these actions in this video, you can simplify the tax preparation process and potentially pay less tax or get a higher refund. Tax preparation can be intimidating, but by taking advantage of these tax tips, you can simplify the process and lower the stress. Contact Torchlight Tax for more information or to set up a free consultation. You can also call our friendly team on our toll-free number 877-758-7797 or email us at info@torchlighttax.com. Thanks for watching. Please like, share, and subscribe to our channel.